Hello everyone, welcome to the 10 Lemons channel. So the biggest news on social media or Twitter is there's a person who's converted 10,000 to almost 1 crore in just 10 months. Right? That was trading, only expiry days, and he's been trading options. Now, whether it's possible or not is, another argument in itself. But I just want to give you one quick insight, at least from what I have done, what I have traded in futures and options, and don't do it much because I don't have the time. But the learning is this. Now, if this person has made this 1 crore with proper techniques and proper strategy and proper risk management, then definitely this 1 crore can become 10 crore or even 100 crores. But if this person has not, or just probably, done it with improper position sizing, probably taking huge risks without a proper plan, just like proper gambling, most of the money that he's made is not probably gambling, but if he has probably risked huge position sizes and he's come this far, I think it might not last longer, and probably he might end up having huge drawdowns going forward as well. So the key learning is, if you want to really make it in markets, then you need to have a proper strategy, proper entry plan, proper exit plan, and a proper position sizing. Position sizing is the most important thing for a trader, especially if futures and options, and that's the most important thing that you have to look forward to. Okay, so that's all I wanted to say before I start this video. But in today's video, I have two stocks for you, two very good stocks. Both companies are excellent. One is from the consumer, one is from the automobile space, and they look really good for long-term investment. And I'm also going to give you two stocks for swing trading, also like just how I gave for the last week, right? So that's what I'm going to discuss today. So before that, I'm sure you saw the last week video, where I did post many stocks. If you did like that, and if you do like my video, and if you do like my analysis, don't forget to subscribe to my channel, and don't forget to like this video as well. So today, as usual, we're going to look at Nifty first and see what Nifty has done in the past week, and then we'll move on to the stocks. Okay, so first Nifty. So Nifty basically, has been one of the excellent indices across the world. Probably the only market which has been really strong. That's probably because of multiple reasons. I don't want to get into the reasons, but from a technical analysis perspective, we have finally closed above this major trend line resistance this week. Remember, this week we had rejection, we had a doji, but there was not a proper sell-off, and that's what I clearly told last week. We are not having a single strong sell-off candle yet. Since last 12 weeks, there's not been a single red candle on the weekly charts yet. And we've had two strong green candles again, but we are still around that resistance zone. And I feel that we have closed above a major trendline resistance, and we are probably heading higher towards all-time highs in the next few weeks or months, right? And that's my take on the weekly charts. Now, looking at the daily charts, so probably I'm going to just zoom in to this area here, and I'm going to show you what I'm looking in the daily chart perspective. So in the daily chart, you see we are forming a very strong, not really a rectangle pattern, but very strong time correction here, and this is still on. I think probably we might have some volatility here. We might go test that 70,600 levels probably again, but this is going to be a very strong channel support. Now, if we break this channel support, that's when we start probably a decent correction. We've not had it in probably 4 months now, and then we might probably head higher again. But for now, if you need to really gain momentum, we need to cross that highs of that, and only if we cross that, we're going to head higher from here. So do keep a note on that level. Friday we had a gap up, but then we filled the gap, and again we closed a little high. So that's also a decent sign. But we need to close above the highs of August. Only then we're going to see a good rally. Okay, so that's my take on Nifty Outlook. Do let me know what you think. I'm sure a lot of you are watching the entire world markets every day, at least in the evenings, at least Dow Jones and SPY, S&P 500. Do let me know your thoughts. But before that, I want to show you how our swing trades have done from the past week, so that you're convinced and you try to subscribe to my channel and you follow me as well. So this is the swing trades that I posted last week. There were 6 swing trade stocks I covered, just pure technical analysis, pure high lows, pure reversal from channels, and we had some 6 stocks covered, and these are the returns that we've had. So almost 11% highest is Coffee Day, then you had a 7% Brigade and TVS Chakra, TCNS brands around 6%, Swan Energy 5%, and Bodil Chemical around 1%. Now, it is not very difficult to learn trading. What you require is a proper strategy for entry, exits, and position sizing. That's all you need, and you can trade well, and you can probably make higher returns than traditional mutual funds, and probably make more money that you need for any goals in your life, right? So with that said, I'm going to move on to the stocks for today. The first stock that we're going to look at today is Zydus Wellness. Now, Zydus Wellness is in the consumer space. It has some of the brilliant brands, or some of the very good brands in the market. So Ducon, it has the number one. It is the leader in the Ducon brand. It has 60% market share. In Complan, it is number 5. It has 4.8% market share. Sugar Free is number 1. It has a 95% market share. Prickly or Nycil has 34% market share. Again, number 1 in the market. Scrub, again, number 1 with 41%. Peel Off, number 1 at 76%. Right. Also, here you have Fat Spread, Neutralite, probably also number 1 in the market. Right. Now, apart from these brands, this company also is looking to build its international presence. It's not, doesn't really derive a lot of revenues from international market. So it is looking into international markets, probably trying to build a brand there and trying to see what products fit in, and it's probably trying to sell there as well. And they want to really grow scale, significantly grow scale, sell more and probably make more money also. Now, there are some headwinds. They've had some, raw material problem, cost inflation. So inflation in raw materials has been a problem. Dollar depreciation has been a problem. It's impacting input costs, and they've had a few other problems as well. But overall, they do have some plan as to how they're going to mitigate it. So they're going to, have price increases. They did some price increases. They have cost reduction programs. They're looking at optimizing costs across the company, and they're trying to, control discretionary spends, ad hoc spends, and they're also trying to have long-term supply contracts, which means, they get probably better prices. So they're trying to hedge their long-term prices with long-term contracts. Okay, so that's from a fundamental perspective, and also looking at the balance sheet here. This company, actually, because of the Cadala's, consumer business which it bought into, so they have seen a strong increase in reserves, but the reserves have increased in the last couple of years or so, right? Also, debt has come down drastically post that Cadala's consumer business acquisition. They have brought down the debt almost from 1,500 crores to 380 crores, right? And here, if you see, the market cap is around 10,000 crores. It's a mid-cap company with almost 6% ROC, ROE, and it has a very good sales growth of 33% and 23% profit growth in the last 3 years or so. So overall, fundamentally, it has a few very strong brands in the market, and also it has a really good balance sheet and also P&L. Okay, the shareholding pattern, I just wanted to highlight this because DIs have been in a buying spree here. They've almost increased from 19% to 25% in the last couple of years, and they hold a very significant share. The free float or the per market, the shares available for the public is just hardly a 7%, right? So that's a very low float. Probably if the downtrend is over, the stock might see some really good move up, and you might see some really good gains. Okay, so that's the fundamental take on Zydus Wellness. Looking at technicals, if you look at here, I'm looking at the monthly charts, and this is a long-term uptrend. The stock has been in a strong uptrend since 2013. We've had some nice moves up. Again, we've had some nice corrections. It has been, that cycle has been repeating continuously. But since 2018, the stock has been sideways. And if you see, probably in the last 6-7 months, we had this crazy move down here with some strong volumes. But after that, the stock has been in a very tight range, right? If you see, the volatility has been contracting. The price move has completely reduced, and the stock is literally forming inside bars for the last many months, right? So it is available at primary trend line support, and volumes also have been pretty decent in the last few months. Even in spite of the contraction, volumes have been very good, and the stock can head higher from here. Now, zooming in a bit into the daily chart, if you look here, we had this beautiful channel, long-term channel, and we had this beautiful volatility contraction pattern or VCP pattern here. And this is a very strong VCP pattern. The volumes have been spiking here. Probably a strong dryness in volumes would have been better, but doesn't matter. For me, this channel breakout plus this strong contraction volatility is very good. And that's why I see this stock breaking out above this trend line probably in the next few days or few weeks. I don't know when, but we're definitely going to see a breakout from this trend line soon. And we're going to probably head higher from here. So what I'm going to do is I'm going to buy the stock at current market price of 1650. And you can probably buy even below if it comes to 1500 levels. Probably you can also buy at that point, right? But what I'm going to do is I'm going to keep a stop loss around this point. So around 1430 is going to be a stop loss. Buy at 1650, 55. So that's a stop loss of just 13%, right? But we're going to look at targets of 2500, which is almost a 50% return from the current market price, or 3.7 times, 5 times the risk that you're going to take in this stock. So as usual, go with 5% if you're a beginner. If you're a good trader investor, go ahead with more position size, but right trend for maximum gains. So that's the first stock from the consumer space that I want to discuss today. The second stock that we want to discuss today is Swaraj engines from the automobile space, and this stock also looks very good. Just look at the engines that they've been selling at. This is the total volume, doesn't take into the price into consideration, but they have been in a strong uptrend in sales. Since 2013, they've been selling higher and higher engines every year, and 2021 has seen some really good numbers, and 2022 has seen a slight increase in the overall volumes, engine volume sold. So overall, I think it had a 13.9% growth in the overall engine sales, and yeah, it is the highest ever for any quarter. Right now, this company is a very good company because the promoters, Mahindra and Mahindra and Kirloskar Industries, two very good companies, are holding a major share in this company. So definitely for me, a company to definitely invest in a portfolio and probably see how it does, and then increase your position accordingly. Right, so taking a look at the P&L, the P&L also has been in a strong uptrend since 2011. They got from 300 crores to almost 1100 crores. If you see the jump in the last 2021, 2022, it has been excellent. Overall, the numbers have been very good. Very steady operating margins, so that also is excellent. And PAT also has it a new all-time high of 109 crores. So overall, fundamentally a brilliant company to be invested in, especially if you're a value investor. Then definitely this makes sense, and not much risk there also in this company, right? So it is a small cap company, 1900 crores market cap. It has a very high ROCE, 49%, and very high ROE. So fundamentally very good. Trading at a PE of just 17, which is probably undervalued a bit at least. And it also has grown its sales at 9% CAGR and 9% CAGR profits as well in the last 3 years. So overall, a fantastic company from a fundamental perspective. Let's take a look at the technicals and see what technicals has to say. So again, technicals also since 2006 or 2010, if you see, we had a bottom here, and we had a very strong uptrend from 2010 to 2018, 8-year long uptrend. And now 4 years we've been going sideways. Right now, the stock might not go immediately up because it still has some space here before it can, probably correct some more time and probably head higher. But what I'm looking forward to here is the last 4 months. If you see, 5 months has been a tight consolidation around this area right after that spike. So it has made a higher high on the monthly charts. So we had a lower high here, and then we made a higher high, and that was the low point. We went high again, we came down, but we've not broken the previous low. So overall for me, the uptrend is again back on the long-term charts. So monthly charts, we are forming a higher low pattern. And I think this is probably the bottom for Swaraj engines, and we might head higher soon. Right? Remember, this downtrend has been a 4-year downtrend. So once we break out of this, we're going to see very good returns probably soon coming in this. So switching to daily chart just to show you what short-term price action is. Again, if you see, we are seeing a small inverted head and shoulders pattern here. We had some major volumes coming in around in the month of July, and then we had this tight consolidation happening here, and I think that we are probably done here because we had this higher low on daily charts. We retested that zone. Again, we are trying to break into new higher highs here, right? The volumes have been excellent. Here also we see amazing volumes coming in. So overall for me, this stock is definitely a buy, considering good fundamentals and technicals. So 1630 is where I buy the stock with a stop loss, around 1440, which is around that zone over there, right? So 1440 stop loss, we're going to buy at 1630, which is current levels. The stop loss is just 11%, 11.5%. And we're going to look for targets of 2400, right? Again, it's similar to the setup that the targets that we had in Zydus Wellness. So it's around 50% return we're going to see. But here, in terms of risk reward, it's slightly higher, which is around 4 times the risk that we're taking in the stock. Again, try to ride the trend as much as possible. Probably keep it for long term as well. If you are a long term investor, it might really give good gains. Okay, so that's the 2 stocks I want to discuss today. If you did like my analysis, do let me know in the comments, and do let me know your thoughts on these 2 companies. Now let's take a look at the swing trades, which I'm sure most of you are excited for. The swing trade, the first one that I want to discuss today is Veto Switchgears. Now I'm not going to discuss fundamentals, but fundamentals are not very bad. Do take a look and do decide how the fundamentals are. But from a technical perspective, this stock is one of the best stocks in this week that I have found in this weekend scanner. And if you see here, we had a strong downtrend breakout, back in October 2021, and we had a massive move from 136 levels to 160 levels, right? Now, since the last 1.5 years, we've been going sideways, we've been correcting strong. We've not, after this massive move up, probably this is the bottom that we made here. It's a channel, trading in a channel, and we have some amazing volumes coming in, in the last few weeks. And now this week we finally broken out of this channel, and we are probably heading higher. So the stock is right now at 114 levels, and I think that stock can head higher from here, right? So what I'm going to do is the daily charts, I'm going to look for an entry and a stop loss as always. So in daily charts, you can see the clear breakout. That's a zoomed in version of the weekly chart, and you can see this clear breakout, amazing volumes coming in every time there's a green bar. And we are probably heading higher now. Now, this week is different, not good, but I think it might do a retest of this level, or even if it can come towards levels of 105. If it comes, definitely buy on those levels. So we're going to keep a stop loss of around 100 here, which is this low, and buy at 114 of it's 12% stop. And I'm going to look for targets of 49% or 50% targets, right? So that's 4 times the risk here. And I think the stock might really do well. If you're a technical analyst, you might love the setup because stop loss is just around 12%. Now you can, if it comes lower, even you can tighten the stop loss and take a higher position as well. Okay, so that's the first stock from a swing trading perspective. The second stock that I want to discuss today is Ducon Infra Technologies. Now, all these companies, Veto and Ducon, are small cap companies. So if you're really a huge trader, probably might not be watching my video, but if you're a small trader, it might be worth taking a position, right? So Ducon, again, this is the primary trend line here, and this is a long-term chart, weekly chart I'm looking at, and we've reversed multiple times here, and finally we are reversing this week. Now, this week, if you see, we had this first attempt of going high. Now, whenever I see a candle like this, some people might say don't buy this stock. But for me, that shows the first time that stock, after this crazy downtrend, the operators or whoever it is are trying to test and see if there is actually some buying pressure. And they try to see and push the stock higher, but there is still selling pressure because the stock comes down. So probably it might take a couple of days before it heads higher. But for me, that volume that week and this attempt is probably the first attempt for the stock to head higher. And if you see last 6 weeks, we had some tight candles after this massive red candle. So for me, that sell-off was not really bad, just retest of the primary trend line, and we are probably heading higher from here, right? So buy at current market price of 14.8, and we're going to keep a stop loss of 13, which is 1.8 points. So 12% stop loss, not very bad for a small cap company. And I'm here looking at targets for 20 or 30 levels, which is 35% or 100% returns, right? So that's the final stock I want to discuss today. So 4 stocks. Do let me know what you think. But otherwise, I'll leave you here. Take care, stay safe, and trade safe. And do remember what I said in the starting. If you have rules, you will make it in markets. So do trade with proper set of rules, and do let me know if you have any questions. So that's it for today. I'll see you in another video. Bye-bye. Take care.